Hi there and welcome to Forger Underwood's latest M&A market update video. My name is Kevin Reid. I'm the host for this session, which focuses on the Asian corporate services market. Now, there'll also be some detail about why developments in Asia are of interest to the global accountancy sector, which of course includes the UK. Now, providing all the detail in this session is Forger Underwood Asia MD Tim Underwood. So welcome, Tim.
Hi, Kevin. How are you?
Very good, very good. Great to have you on board. Now, for those of you who don't know, Forger Underwood provide M&A and consultancy services to professional services firms, and we have offices in the UK, Hong Kong, and Singapore. Now, today's session is going to be quick, probably around 20 minutes or so. We know your time is precious, but the show, I can assure you, is going to be jam-packed with some really interesting information. Now, I'm just about to share a screen, and we should be able to show you some details about what we're going to cover today. So hopefully you can see all that. So we effectively have three main topics of discussion to cover. There'll be a general market update on Asian corporate services providers. We'll touch on obviously the impact of COVID on the market. You know, it's been the all-pervasive thing of the past year or so. Last but not least, we'll also discuss what these developments mean for Asian practices and how those developments will actually be further reaching, impacting practices in other countries and continents. And as I said earlier, of course, that includes the UK. So I'll now unshare my screen and we can kick off proper. So Tim, first question, please explain how you define the Asian corporate services market. Who are the kind of key players and what do they do and where?
Yeah, it's an interesting market, probably not too dissimilar to what you would see in UK, Europe, US, Australia, in that we define corporate service businesses as those accountants which are providing compliance services to their own clients, albeit they don't provide audit and assurance services. So typically, you know, there's certainly the UK that we know very well, and across Europe, there's a big market for these type of firms. They would be classed probably as accountants in the UK and Australia, where they're providing bookkeeping services, tax compliance, payroll services to the end clients. But in our definition, within an Asian context, they would also be providing incorporation services, which is a key feature of the market out here in Asia when clients are looking to move out here, corporate secretarial services, as well as immigration and visa work when the end client wants to move staff into the new markets they've set up in. So really that's what we call corporate service clients. But as I say, you're either going to find corporate service units within existing general practices, or indeed you'll find the separate market, as I say, which is already there in a lot of the mature markets anyway in Europe and US and Australia.
Is there
so that's how we use that.
Is there a particular reason why that market has developed, why we have these corporate services providers?
Well, I think in an Asian context, well, actually, let's take it back. Sort of post Sarbanes-Oxley, a lot of the larger firms in this corporate service bucket, if we can define it as that, were created post Sarbanes-Oxley when the Big Four effectively were forced to sort of sell off their outsourcing division and their accounting division, given potential conflicts of interest. So that created some of the larger firms. But I think in an Asian context, you know, if you were an end client sitting somewhere else globally looking to set up, you know, manufacturing, for example, somewhere in Asia, you know, there are regulatory issues and language issues in, you know, a whole variety of countries across Asia, which make it far easier to therefore outsource to a specialist, which could be an accounting firm, or it could be, you know, as a corporate service firm, which does immigration and visa work as well. And if they have a couple of offices across Asia and you're looking to expand across Asia, then you know, you can sort of put it all under one roof with one provider.
And do we know who these firms are, you know, from the West as such? Are there any familiar names, or do we see them actually in markets outside of Asia?
Yeah, so in this space, there's definitely, they've got their own Big Four, if you like. So the likes of sort of TMF, Vistra, Intertrust, they're some of the larger firms. They have a corporate service side to their businesses, as well as also having a private client and trust division, which are obviously focused on families, family offices, and private clients, and helping those clients on the private client side with wealth preservation and wealth transfer. But those are probably the larger global firms, which would be in excess of 4,000 or 5,000 people globally, 50, 60 offices across sort of major jurisdictions.
Okay, brilliant. So I think that kind of defines and explains the corporate services market. So thank you very much for that, Tim. What is the current state of the market? I mean, that can mean quite a few things. How are they acting? What are they doing? Is there any M&A activity? How are they structured?
Yeah, I think looking at that in two different ways. I think that the market here, certainly in Asia, well, globally, let's say, there was a lockdown at various times, and we all came out of those lockdowns also at various times across last year, and that was COVID was obviously fairly impactful. I think the end clients, so the clients of the corporate service providers and accounting practices, to some degree, have been treading water. What we hear from our clients is that their clients have deferred further investment into the region, but that doesn't necessarily mean that that's reduced the sort of level of work within a compliance capacity that they were already doing for those existing clients. So, the nature of this business in the professional services, it is quite sticky. It's quite annuity type income, and we haven't seen a huge fallout in terms of clients, end clients retrenching a lot of staff, winding up certain entities. So I think it's sort of steady as she goes. We have examples of clients that have done exceptionally well over the last 12 months. One or two cases, people who have been in certain niches in certain markets where they've actually doubled the size of their business. And on the M&A front, there is deals still happening. I suppose initially when COVID hit, there were acquirers that were contacting us that were interested in sort of distressed sales, if there were any. We didn't think there would be any necessarily. And I think what we saw in the global financial crisis, which might be borne out to be similar in the current environment, is that there tends to be a delay before there's an impact within the professional service space, and particularly the accounting space. So that might still be on the horizon or over the horizon. But at the moment, no significant impact. The multiples on deals that we've done over the last 12 months have held up. They've been very similar to as they were the 3 or 4 years prior to that. And we've done deals across the region in 3 or 4 different jurisdictions. So the deals are still happening. We've done 3 deals actually in the last 12 months, which are sort of virtual deals where the buyer and seller haven't actually met otherwise than over these sort of mediums. Which was quite interesting for us.
How did they progress, Tim? How did they progress in terms of doing the due diligence and the making sure people got on and were, from a cultural perspective, heading in, the same direction?
Yeah, I suppose in terms, you compared it to sort of a normal deal pre-COVID times. The heavy lifting around the due diligence and getting comfortable with the target business, really ran as smoothly as it would normally, because you're appointing advisors that are on the ground to go in and do the commercial, legal, and financial due diligence. What I think is always going to be missing, which is a key feature in any of these M&A transactions, is that personal contact and actually being able to sit across the table from someone where, if you're buying their business, and most of the businesses we're involved in selling in Asia, they tend to be with management continuing rather than succession driven. So that's quite an important feature on the sort of softer side of the deal. And I think that was lacking, but we managed to get those 3 over the line, which was good. It did need a lot of Zoom calls and the equivalent, but I think it works. It's not ideal in all scenarios, but it works.
Okay, that's great. Thank you for that detail, Tim. Could you give even more detail about, I guess, the type of deals that take place? Why do they take place? Who are they between, and who are the funders, or who's looking? Is it PE back to PE back, etc., etc.?
Yeah, that's an interesting point. I mean, as there is with the sort of broader general accounting sector, there are obviously different sort of tiers of these type of firms. So at the larger end, with some of the names we've mentioned, and the sort of second and third tiers, there is a variety of private equity money that has backed those firms. and therefore they've got their own models in terms of wanting to grow both organically and inorganically, which requires them to continue to go out and buy within specific service verticals that they want to expand in, either in existing jurisdictions that they're in, or indeed to enter new markets. So, yeah, there's certainly at the top end, I think the big four, they're all private equity backed. They would, as a result, have 6 to 8 year sort of windows where they want to grow quite aggressively. And then as you go down that sort of list into the smaller groups, there's some family offices that have invested in some of these corporate service and accounting firms, and then a good number of obviously independents. And what we're finding amongst the independents is they're attracting both staff and clients away from some of the private equity backed firms that have become less comfortable with some of the drivers of those private equity models. So there's some interesting features when you sort of compare some of the mid-tier firms that are doing very well, taking clients away from some of the larger firms.
Okay, that's great. So that's even more detail. I really appreciate that. Something we've not touched on yet is technology. We've talked around the structure of the practices, some of the deals that have taken place, but technology is a really important driver of, I guess, change and growth in terms of the corporate services market in Asia and Australia. So could you give us a little bit of detail about where that is, and obviously we'll then expand onto why that's important to accounting firms and other types of PS firms outside of those jurisdictions?
Sure. Well, I think, look, we've been talking about technology in the professional service certainly over the last 10 years, but really it's been a feature, for as far back as I can remember in professional service context. I think we have gone through a real phase here where, with AI, certainly certain aspects of any practice can be automated now within the various service lines. Compliance to a large degree, governments are getting on board in terms of trying to access information at source, and the likes of Xero and obviously other cloud-based accounting and tax platforms have really taken hold of the market within that specific area, since they were launched 10, 12 years ago. That's a good example, certainly in Australia, where Xero sort of is HQ. There are a good number of firms there that, in our own definition, are sort of corporate service firms, so not providing audit and assurance services, that have managed to adopt Xero, have been early adopters of Xero, and then have managed to bolt on additional apps to the Xero platform, because obviously it's an open API, to basically streamline specific processes, either in terms of client delivery, boosting productivity internally, e-signatures, those type of things, which previously had been quite manual. Which I think if you look at a typical accounting practice, they can obviously do that exactly the same way as some of these corporate service providers have, but they have the backdrop that they're always going to be providing audit services and other higher end advisory services, which requires manpower, and invariably at the advisory at the top end, expensive manpower and skill sets that need to be plugged into those type of advisory services. So we are seeing, certainly in the Asian context, a good number of these type of firms that are leveraging that type of tech. And in certainly 4 or 5 cases across the region, firms that, rather than adopting off the shelf technology, because in some of these markets it hasn't been available, developing their own. So they might have taken Xero or QuickBooks and basically built around that in terms of developing their own platform for all the reasons I've described previously.
And there are instances of that in the UK and Europe, but not particularly widespread, I think we could say.
Yeah, I think there are there's probably 1 or 2 larger firms in Europe and certainly in the US, some that have developed their own tech, and then there's a whole raft of smaller firms. Certainly, we know the UK market very well. In the UK market, there's a whole raft of these type of bookkeeping and tax compliance type firms that have done exactly what I described. They've taken one of the cloud-based accounting and tax platforms and then bolted on a whole range of additional apps around it. So yes, you're right, it's nothing new. I think the differentiating factor though out here in Asia is that the firms we're working with have adopted a core platform but then have built their own features around that platform to drill down, creating data lakes, drilling down into that data. And really, as a result of developing their own tech around the cloud-based platform, it's much more integrated. And I think that's the differentiating factor between them and some of the other mature markets like the US and Europe and Australia.
We've touched on a few points that I think we need to pull together really in terms of where things are moving. We've talked about the fact some of these corporate services providers are not just Asia or specific region or country specific, and that there are different types of ownership models, that there is some funding, there has been a lot of resource go into tech. There are ramifications for other markets because there's the potential for Asian expansion, shall we say. Would you give some detail about that, Tim?
In terms of Asian firms moving into other mature markets?
Indeed.
Yeah, well, as I said, the type of firms that we're aware of, and some of which we've been working with out here in Asia, I think they're going to be disruptive even to these bookkeeping and tax and highly tech orientated firms in these more mature markets of Europe, US, and Australia. And that's because they're coming at it with owning the IP for the technology they've developed. And as a result of it being more integrated, yes, they are now looking at those mature markets because they've effectively done proof of concept in Asia and built out those platforms. Now, the platforms will need to be harmonized for whichever markets they decide to go into. But I think the barriers to entry, perhaps, of just adopting a cloud-based platform and then taking off-the-shelf apps is quite low. And while some of those firms in UK, US, Europe, UK, and US are doing very well in terms of growth, I think that, as I say, these firms in Asia are probably going to be disruptive within that specific space. And in doing that, obviously, they're going to come into competition with some of the general practices as well.
Obviously, all of the markets are slightly mixed up. Everyone does things slightly differently. You talked about, and this is the last question, I think, Tim. I'm mindful of our time and our audience's time.
No problem. Yeah.
You've got corporate services providers that I guess are quite production line focused, very regimented. If you take the UK as an example, where you've got firms that are using tech to streamline services, but also think about their ancillary services and providing more value to the client. There is an argument that those two don't necessarily mix if one is so focused on regimentation and the other one is using automation towards something else. How do you, who's going to match up with whom, do you think?
Yeah, it's an interesting point. So, the parties we speak to that are, significantly more automated and streamlined, given the technology that they've adopted, tend to attract a different type of client. And as a result of that, they tend to grow quite quickly because they are offering a commoditized service, which is backed by the technology. But they do see that as an evolution in their business, which could change. So they are seeing that, at the moment, the channel to new business as a result of the technology is providing these type of commoditized services to capture the client within bookkeeping or, bread and butter tax. But they are not saying we're not necessarily going to go into higher value add type services if the client needs that at a later date.
Yeah.
But they're just dealing with the low hanging fruit at the moment. And they've got enough work to deal with, and the margins on this commoditized business are, very high, as the advisory side could be down the road, but it doesn't have the cost implications at the moment.
Sure. I think obviously the tech really is the pivot or the leverage to be able to expand and do exciting things. These markets are opening up, and I think COVID has really shown that businesses, small and large, do require a lot of care, help, and attention, and I don't think that's going to go away anytime soon.
Yeah, absolutely agreed.
Okay, well, Tim, I think it's probably a good point to round up. Thank you so much for your insights.
No, it's been great to speak to you. Thanks, Kevin.
Good stuff. And to our audience and to you for watching, we really appreciate it. As ever, Folger Underwood is here to provide consultancy and M&A support for professional services firms in the UK and Asia. Please drop us a line if you'd like to chat about market developments or help set a direction for your practice. What I'll quickly do, just to finish off, is share my screen again. And this provides details for Tim. So, Tim, there's no escape for you from the audience.
I'm locked in now.
Hopefully, if you are watching, feel free to drop Tim a line. There's phone numbers there, and obviously Tim's email address. And if you want to find out more about Fuller Underwood, our website address is on there as well. So again, thank you very much. It's been great having you on board.